Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome into this edition of Phil's Tax Hacks and Other Retirement Facts. Episode 145, I believe, is what we are on. And tough topic, Phil. We're going to have to talk about divorce a little bit, retirement and divorce. Not just divorce as the broader subject, but really for seniors, I guess, or silver. I guess what are they calling it? Silver divorces or gray divorces, something like that. But people over 50, more commonly of the last 4 or 5 years, getting divorces. And so when you're closer to retirement and getting a divorce, it's a whole lot different animal than if you're 25 or 28 and getting divorced. You don't have as much typically. You don't have as much stuff to split up, right? So tough topic, but probably an important one to talk about. How you doing, my friend?
It's a very important topic to talk about. I'm doing good. Really good.
Yeah. So, have you run into some the last several years at all? You know, people coming in dealing with
unfortunately so. Yeah. I mean, and I'm actually working with a client right now that's in this scenario, you know, so it's you know, it's one of those things, retirement. I was talking to a couple earlier that they said they've got a friend of theirs that they just retired, similar age, and they went to spend a week with them, and they said, "Oh, I don't know if they're going to make it." They were just at each other the whole time. Yeah. And I mean, that's one of the realities of retirement is now you're together 24/7, you know, where before you've been apart more than half the day, the kids are gone. It's, you know, it's just you know, and it hasn't been just you in how many years. So,
and right, wrong, or indifferent, many people realize at some point that they were staying together for kids. You know, and that's unfortunately a rough way to be. And then, you know, coming out of COVID, you know, we got a taste of 20. I mean, my wife and I joked throughout COVID on the regular, how many people are going to survive, marriages are going to survive being jammed together like this and not being able to leave or do things. And is it a good precursor to retirement? Because that's kind of what's going to happen when you get to retirement as well. You know, although hopefully you could go out and do stuff, unlike when during the pandemic when we were on lockdown.
Yeah, the pandemic, you're in lockdown. So,
but it was certainly a heck of a dry run for people, and many people didn't survive, as to the point of our conversation today. So let's go through a few things. You know, obviously, if you're working with somebody right now, change, you know, some information if you feel like sharing just to protect folks. But I'm sure that you can share some stories or some similarities to our topic, which will be relevant today. So let's start with a couple of things. So we'll go with the traditional conversation of, you know, husband and wife are splitting up. And often what we've seen in the past is sometimes there's that emotional connection to the house. And so sometimes the females might be like, hey, I raised my kids here, or maybe you still even have a high school or college age kid. And you go, I'll take the house. You can have the other assets. We'll split it that way. Because we have this misnomer that the house is our biggest financial asset. It may be, Phil, but it may not be. It may not just be the default move, I guess.
Yeah. And I mean, to me, I'm sure some people that disagree with me on this, which is fine. I mean, that's what the show is about. Everyone's got opinions. But my approach and my view of it, right? So, I mean, a house as an asset, sure, it does have value, but what is an asset? An asset is something that generates growth or revenue income for you.
Right.
And a house, it might grow. It does typically. Sure. You know, decreases in value too, but it doesn't do that without a cost, right? So a house always has a cost.
Yeah.
You know, even if you don't have a mortgage, because you have taxes and insurance at a minimum. And if you're living there, well, you got utilities.
Sure.
You know, so I mean, it's always costing it's always costing to live there. So it's not, in my view, at least, an asset as much as it's a liability. In a divorce, it can be a key thing to understand though, because it's looked at more like just an asset, which it is, right? There's value equity in the house.
If you're selling it, that makes sense.
If you're selling it, but in a divorce, a division of property, that's how it's looked at is, well, here's the equity in the house and here's money in an investment. And okay, they're both worth the same. So you take the house, I'll take the investment.
Right.
And okay, so now you've got the house, even if it doesn't have a mortgage, well, what are you going to do to pay the taxes and insurance and maintenance and utilities and all the other things that go with it? Do you have other assets or income to support it?
Yeah.
Because maybe you got the house, but now you can't afford it.
And it might be the right fit that's what you really truly want, but just don't walk into it and take it from that one angle of
Absolutely.
Just know the fact that, to your point, that it's not going to grow like, the retirement accounts, for example, that you've given up, so to speak.
And it's not spendable, right? So, I mean, to the equity side of it, yeah, okay, so great. It's got equity. It doesn't have a mortgage. That's what you have. You got the house. But what if you need some of that equity? Well, now you got to go to the bank and try to get some, right? You got to borrow against it again, or you're going to have to sell it.
Right.
So maybe you wanted this because one of the kids was still at home or whatever the case is, or sentimental value. But at the end of the day, you can't afford it. It doesn't work. Then, you better to find out that up front and get into it from a sentimental, emotional standpoint and realize maybe I should have made a different decision.
And I get it, Phil, because sometimes we might think of it as, well, then I've got a place to live, and at least that's one less worry, right?
Right.
I'm getting divorced. I've got all this stuff coming at me, but I won't have to worry because I got a roof over my head that's paid for example. And so I get it as an emotional reaction to safety and protecting oneself. But just here's a lot of times, especially for senior divorces or whatever there is that they're calling these, it's not just about a divorce attorney. I think we're going to probably circle back around to that quite a bit.
Yes.
It's important to have other people on your team if you're going through a divorce at this point. You do need a financial professional to look at these, because an attorney, let's be honest, they're going to talk about dividing the assets, but they're not going to really be thinking about them or looking at them the same way a CPA or a financial professional would.
Right. So, I mean, a divorce attorney, their goal is to get assets divided and the divorce finalized. Their goal isn't anything to do with what happens after that. As a personal financial specialist and advisor, I mean, yeah, we're looking at that and understanding and making sure division's fair and equitable.
Sure.
But then we're looking at the stage beyond that. Well, how does this work long term?
Yep.
It's one thing to have it a fair division of assets up front, but is that really fair long term?
Right. And then
is it going to work?
Yeah.
Right.
Yeah.
So,
and that leads us to our next one. So, so we're moving on from the house conversation. So ignoring the tax implications of the accounts, of the retirement accounts. Again, you could easily get into the conversation of, okay, fine, you take this one, I'll take that one.
Right.
But what's the tax ramifications of said accounts, and how does that play into what you're going to owe? Because you're also changing tax brackets, by the way, you're getting divorced.
Absolutely. Now you're going from married filing joint to single, so I mean, tax rates don't change, but the brackets all get shrunk down, they get compressed.
Yep.
So you with similar income could get pushed into a higher bracket.
Right. Yep.
So yeah, to the point of, okay, you've got, let's call it two different assets. You've got a couple $100,000 in a retirement account, an IRA, and a couple $100,000 in a non-retirement account, what we call a non-qualified account, traditional brokerage account. When you're looking at it from a statement value, they look like the same thing. You take the IRA, I'll take the brokerage account.
Or the Roth the IRA.
Right. Or, I mean, exactly, the Roth or the IRA. Well, it's not the same, because that IRA isn't worth $200,000. On the face it is, but it's like a mortgage on a house. It's not all yours yet. You got to pay off the IRS and the state.
Yep.
So you're going to lose 15, 20, 30 more, maybe 50% of it, depending on your bracket. Now you're single. So just understand, what is the tax ramification of the asset I'm getting in the divorce. In taxes, this is one of the biggest aspects of a divorce that they get overlooked.
Oh, I'm sure. Yeah. And again,
it's because the attorneys,
right,
that's not their specialty.
Not their field.
They're not trained in
not
that.
Their thing. Yeah.
So you have to make sure you've got somebody that understands the tax side of the picture and can put that into play.
Yeah. Does it cost a little bit more? Sure. But I think we probably realize again, to my initial point, getting a divorce at 25 or 28 versus 55 or 58 is incredibly different. The emotional component is probably different as well, especially if you've been with someone 5 or 10 years versus 30 years, right? Or whatever the case is. But then just the simple financial aspect, which again is what we talk about obviously here on the show, is compounded. So having a team, it's going to be probably worth it to spend that extra money, not only having a divorce attorney, but having a financial professional, a tax professional, maybe rolled into one like you, Phil, but either way, because those things are going to be important. So speaking of the taxes and the accounts, let's drill back down on this for a second. Talk to me a little bit about this rolling a spouse's retirement account directly into a new IRA or an IRA immediately after the divorce, and something called a quadro or QDR.
Yeah. So, I mean, it's not as easy as, okay, well, you take, let's make a traditional case, right? So the husband is the one that primarily worked, maybe the wife stayed at home with the kids and has some assets, but not as much. The majority of the assets are in the husband's 401k.
Okay.
And I mean, this is the scenario that I'm working through with a client right now.
Okay.
Well, so in division of assets, let's say the wife gets half of the 401k. Well, how does that happen? Right. I mean, if the husband is going to take half of the 401k out and give it to the wife, well, he's going to pay tax on that because it's his 401k. Well, that's not a good idea because, now again, he's single and it's going to drive him way up the bracket. And this,
he's being
minus
penalized.
the taxes, she's not going to have as much left over. But you can't roll it from his 401k to her IRA without this thing called a quadro.
Okay.
So it's a qualified domestic relation order. And basically it's a provision or a document that allows that to happen. It allows one spouse's retirement account because of divorce or separation to go into the other spouse's IRA.
So it comes out of person A into person B and neither are taxed?
They're neither taxed on the transaction. It's like a rollover.
Okay.
Right?
Okay.
Because I get this discussion sometimes with clients up front. Well, can't we just combine our IRAs and make it easier? Well, no, it's an individual retirement account. So each of you have your own. The reason for that is ages for required minimum distributions, et cetera, and limits when contributions happen. There's a lot of reasons that it's set up that way. Individual
retirement agreement.
It's individual agreement. Actually,
I learned that.
You're right. There you go. Yeah, it's an agreement. So, but because of that, you can't go from spouse A to spouse B, right? Without this quadro in place. So and that allows
like
you
to the judge kind of issues that type of deal.
Well, no, it's actually written up by an attorney.
Oh, okay.
But usually it's part of the divorce. They'll order a quadro, which then it gets written up based on the divorce agreement that then that 401k in my scenario, that plan sponsor needs the quadro in order for it to be able to distribute to the spouse's spouse B's IRA.
Okay. So, I was reading a little bit. So can you use the funds from a retirement account to pay for divorce costs or proceedings? I was reading something in there about that, trying to understand that a little bit, that you could roll the money over. You can pull some out without the standard penalty if you're under 59 and a half is that part of the quadro as well?
Yes. I mean, you could build that into the quadro to pay for it without paying that extra 10% penalty. And I mean, that gets in a whole nother scenario to understand is, so 401k versus IRA, I mean, and ages, I mean, if you're under 59 and a half, over 50, let's say between 59 and a half and 55, you have some options that if it's left in a 401k, there's not a penalty. If you move to an IRA, there could be, so you've just got to be conscious of, again, the tax side of this whole equation of when I'm dividing the assets. Yeah, it looks good on paper. It's a equitable division, but now let's look at the tax side of it. And how do I get access to it?
Yeah.
Because it's not just getting the asset. It's what does it look like beyond the divorce?
Yeah.
From a tax, from a penalty, just general access. Do I have enough to make it work?
And there's probably a ton more things in that. I don't want to get super far into the weeds, but I wanted to touch on some of the things that we don't think about, Phil, because what we're doing basically number 4 is we're more than likely reacting to the emotion of it all.
Yes.
Whether you're in that position of, thank God I'm finally rid of them, right? And you can't wait for the party because you can't stand one another, or you're broken up. Even if you're putting on a big face and you're happy to be done with it, you're still going to have an emotional, whether it's an angry emotion or a sad emotion, you're still going to have an emotional reaction to whatever. And so
absolutely. And we're human. Yeah,
we're human. So trying to figure out, I guess sometimes we're just ready to be done. And so it's, path of least resistance for some people.
Yes. In
a divorce. It's like, look, I'll just make this easy. Give them what they want so I can be done with it.
Yeah, I don't want to talk to them anymore. I want to, let's just get this over with. So,
and as you're approaching, if you're 50 plus, it's just not the right. You don't have to be mean or vindictive. We're not, whatever the case is from that standpoint. Just watch yourself in that arena, because it's like, you're 50 plus, make the best decisions for everybody so that everybody can walk away as fairly as possible. But just make sure you understand all those nuances. And again, Phil, I just think it's so important to have a financial professional at this stage. I'm glad that client you're working with is not that they're going through the divorce, but that they've turned to you for help, because there is all these nuances.
Right. And I mean, it's like any financial decision. We've talked about this before, going into the bear market. I mean, emotions start to take over, and unfortunately, that's the emotional beings we are. We make decisions sometimes irrationally based on those emotions. I mean, and divorce is a very emotional scenario, to run through. Yeah, you don't want to jump in and say, oh, just whatever. I'm done talking to them. Like, if that's what they want, let's do it. I understand. Take a step back, a deep breath. Let's walk through this so you understand what you have. Yeah. Because you don't want to make the decision, get done, and then a year later or 6 months later realize, you know what? I wish I would have done something different. Yeah. And that's where a financial advisor can help, is they can hopefully, if you're working with the right one, at least walk through the emotions and say, hey, I understand, but let's look at the financial side of it. We have to do that.
What do you have?
You don't want to get down the road and realize it was the wrong decision. Yeah. As much as you want to just get it over with, let's make sure it's fair. So that Phil, fully what you're getting out of this going forward, and that it works.
And I know we're getting tight on time, but there is a Social Security aspect of this as well, right? Depending on what age it is that you find yourself getting a divorce. There's a couple of rules there, right? So
so that doesn't really have anything to do with the divorce decree itself, but
it can factor into your future planning.
Yep, it can. And I mean, that actually is an interesting aspect with the current scenario I was working with. In this case, the husband was the one that handled finances and had recommended that the spouse file for Social Security early.
Oh, okay.
And it was because of infidelity that the divorce is ending, and he was spending a lot of money. So now he's locked her effectively into a decision. I mean, it was her decision. She had to file. Right. But she did it based on his recommendation, but it affected her now going forward for life because she locked in Social Security early.
But can't she petition for his as well? Isn't there a rule in there about if you're married for 10 plus years, you can.
Well, there's divorced spousal benefits. Sure. But it mathematically has to work to where, her benefit was less than half of his. And because she filed early, there's the reduction. I mean, there's a lot of factors. The potential is there for this divorced spousal benefit. Yeah. So that is the case. If you are getting divorced, make sure you understand you potentially could get a spousal benefit against the next spouse, or even if they pass, maybe a survivor benefit.
Right. Unless you were to remarry. Right. Yeah. But
unless you get remarried. Yeah. There's a lot of nuances to that, but
my mom did that. That's how I know.
Yep.
But
so anyways, just there's a lot of moving parts in a divorce.
Sure,
and, really the last point is key. I understand it's an emotional decision, but try not to make an emotional time going through this, but try not to make decisions based on that emotion. Take a deep breath, work with that professional to get the second opinion, understand here's what the tax side of it looks like. This is how ultimately it plays out at the end. Is that okay? Does that still work? Does it solve what you wanted to do?
And I like the future ramification part of the conversation. The divorce thing with the attorney is a lot of that is very immediate. Getting it done.
They're just looking at today.
Getting it moved on, getting the separation happening, but bringing in a financial professional into your team, your divorce team, if you will, gives you that future look at some of the assets and things as well. And so that's hopefully a smarter way to go about it. So again, tough conversation, but we won't get too far in. But if you've got questions, if this unfortunately is on the horizon, or you're in the middle of it, kind of like the client Phil's currently working with, reach out to a qualified professional. Ask some questions, bounce some things off of them. Maybe if you're working with a divorce attorney, they may recommend someone as well. So, a lot of times professionals have, relationships with others as well. Phil, I'm sure you have elder law attorneys and things that you recommend for various things as well. So just reach out if you've got questions or concerns, folks. As always, stop by the website, philstaxhacks.com. That's philstaxhacks.com, or definitely call Phil if you've got some questions. Get on his calendar for a conversation, 248-888-7530. Don't forget to subscribe to us on Apple, Google, Spotify, iHeart, Stitcher, YouTube. All that good stuff is where you can find us. And we'll be back next week with next week with a lighter topic. I'm sure. Yeah. And we'll go from there. But it's an important one. It is part of life.
It is. It is. I mean, it happens. It's so whether this is you going through it or somebody that's going through it, help them take that deep breath. Get somebody that can give that future perspective on it and give some tax advice to make sure they're making the right decision before they get in and make the wrong decision. But now it's too late. So
yeah, well said. Well said. Yeah, it's happening more and more for people closer.
Unfortunately,
to
it is.
So
Yep.
it is. So we have to deal with what we have to deal with. So thanks for hanging out with us, folks. We always appreciate your time. We'll see you next time here on Phil's Tax Hacks and Other Retirement Facts.
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.